What's up, guys? Welcome back to the channel. In today's lesson, I'll be giving an in-depth analysis on retracement. Retracement is underrated in our trading strategies. As a matter of fact, every trading strategy revolves around retracement, and this is why I'll be explaining it in today's lesson. I'm going to explore what retracement is, their significance in market dynamics, and how understanding them can enhance your smart money trading strategies. Okay, I know you're always ready once you click on a video, so let's jump straight into that. But before that, last 2 weeks I introduced the occult trading book, where I said this particular trading book improves your trading psychology, and I said I'm be giving out two for free. So these are the lucky winners, these two names right here. So do well to test me after this particular lesson. You will receive it. And for those who are actually thanking me, because few people were able to purchase this particular trading book, and for those thanking me for suggesting it, well, I'm not actually the author of this particular trading book. It's Mr. Michael. I'm just helping him market this piece of art because I actually got value from it last year. I knew about this book since last year, so I'm just helping him market it. And if you're still interested in getting it, the link is in description. So let's go ahead and talk about retracement, which is the important thing we'll be discussing in today's lesson. Now, a lot of people have idea on what retracement means. Some people actually trade retracements alone, but today I'm going to give you more ideas, more clue on what you can do with retracement. As a matter of fact, understanding retracement can improve your win rate as a trader. Now, in smart money concepts, trading retracement is very vital. Understanding retracement is actually very, very important. Why? Retracement creates new trade opportunity. This is very true. If you understand retracement, it creates new opportunity. It gives you opportunity to get involved in trade opportunities. Secondly, retracement helps build liquidity pools. Yes, it's during this retracement phase we usually see price building liquidity. And it's during this retracement phase we see price building some liquidity and inducement areas. Now, retracement phase is still the exact same phase where we see price coming back to rebalance our inefficiencies. And not only that, retracement phase is actually the same phase where we see price coming back to our order blocks. What does this tell you? This tells you that this is actually the phase where we start anticipating a potential reversal in some price actions. When price comes to your order block, a valid one at that, this is when you start anticipating, okay, price can now change direction or move to the opposite direction. Why? Because of the retracement phase. And once price comes back to rebalance your inefficiencies during this retracement, believe me, you can as well get potential entry points. And retracement can as well help you place your stop loss at a very good area. So these are all the things I'll be touching in today's lesson. This lesson is actually going to be a little bit different from what I usually do right here. Okay, some people might actually get bored, but I have to teach you what is right. Now, what does retracement look like? As a matter of fact, if you look at this particular price action, you will see that we have the main trend and we have the retracement. And before I even talk about this, what do you even understand by retracement? Because some people might be hearing retracement, but they don't really understand what retracement means. Now, in a simple term, I can tell you that retracement occurs when price is temporarily pulling backs. I can as well tell you that retracement is a temporary reversal or pullback in the opposite direction of the trend. It's actually a temporary reversal in the opposite direction, not the main direction. Now, the price moves against the main trend, and after it moves against the main trend, we usually see the continuation of that particular trend. Now, what does this tell you? This gives you the idea that you need to identify where this retracement ends, and you can as well try to get involved because you know after the retracement, the main trend usually continues. I hope you get that. Now, let's go back and explain what retracement means with the simple examples I'll be showing you in today's lesson. Now, take a look at this particular price action. You see, price is bearish. The current price action is bearish, and retracement can as well help you understand when price is changing in its direction. But I'm not actually going to pay attention to the whole details because price is very big. If you try to look at everything on the price chart, believe me, you will get confused and you won't really understand anything at all. Now, let's start from this particular area right here. Price is bearish, and if you see, this is the leg of price continue with the bearish movements. I hope you get that. Let me try to zoom in so you see this clearly. This is price continued in its bearish trend. And after we had this move to the downside, what do we see right here? This is what we call retracement. That move against the direction. That's minor pullback we usually see. So this is what we call retracement right here. And after the retracement, what do we see? We see price continuing in the direction of the trend. And I made a statement. I said retracement creates new opportunities. Now, which opportunity are you actually seeing after we had this retracement? Now, how are supply and demand zones created? Supply and demand zones are created when we have a slow price action. After that, we see a rapid expansion out of the areas we had that slow price action. Now, take a look at this area. This retracement automatically turns into a supply zone, and supply zones can be refined. It could be refined to this particular area we had that slow down. I hope you see that. So I said retracement creates new opportunity, and you see we have another trade opportunity right here. This is your supply zone in this case, and if you try to extend, what can we see right here? The second retracement we got gave us an entry. Now, let me explain so you understand. This was the reaction to the downside. Here is the retracement, and there is no particular way to mark retracement. Some people usually have specific way they tell you to mark your retracements and pullbacks. I'm not going to do that. I'm just here to explain what retracement means and how it provides opportunity in the financial markets. So this was the retracement phase we have right here, which created a supply zone in the market. And after that, we have a continuation to the downside. That is continuation of the original trend. Now, after that, we had what? Another retracement. And where did the retracement pull back? In this case, we had a bigger retracement. You see, this is a bigger retracement. And this particular retracement pushed price where? Back into a point of interest. You see, this was the zone that was created. So when this zone was created, price pulled back again. This is retracement. Once again, we seeing retracement in action. The thing we've been able to identify is that the retracement phase gave us a new opportunity by creating a supply level. And secondly, the retracement phase also gave us an entry by pulling price back inside the points of interest it was able to create. I hope this established it. Now, after that, we started seeing some minor trend, that is minor retracement inside the overall trend, because if you want to mark your current zone and the current area, this high and this particular low is your zone. I hope you get that, this low right here. So everything price is doing inside this particular range is what? Your retracement. That's your retracement. This particular leg of price is your retracement. And after that, we had a continuation of the existing trend. That's why I said you have to really pay attention to this retracement phase because it creates opportunity. Now, when price continues in its direction, we're able to spot price sweeping liquidity right here. I hope you get that. Price sweeps liquidity, and after the sweep of liquidity, we equally had a minor retracement. But this does not mean you should go about trading retracements. I'm just opening your eye to see how important retracements are. Or you can go ahead and try to adjust and include one or two things you will learn from me today into your trading pattern, because I use it, and I'll still go ahead and show you few trade opportunities I was able to get on this particular pair. This pair is on USD card. This is the 2 hours time frame in case you want to do your personal backtest. Now, after this retracement, we saw another slow price action right here. This was a slow price action, and a lot of people might actually decide to mark here again as their point of interest, which is going to serve as their supply zone. Yes, it's a supply zone, and refinements can be done as well. You can go ahead and refine. Let's pay close attention to what price did at this particular example, because understanding retracement, like I said, is very important. Now, after this pullback, because this was a pullback, price continued in its trend. What do we see? A break of structure right here. So this bearish candle is your trend continuation candle. The area we had right here where price was able to print a new point of interest is a retracement phase. When price broke structure to the downside, printing a new lower low, what are we going to expect? We expect that price pulls back. And during this expectation, we still anticipate that price is going to get to a point of interest. Now, this was another retracement phase back into this point of interest. Not only did price pull back inside that area, I said retracement creates liquidity. It builds liquidity as well. It creates those liquidity inducement area you see. And this is example right here. This is more like equal highs right here. So what price did right here is that it builds liquidity above the point of interest, helping make this particular point of interest a valid one. And finally, we see price coming to sweep that liquidity and continues to the downside. And just like I said, we can as well have retracement inside the overall trend because this is the current trend, this high right here, and this particular low right here. This is our daily range. If you know about daily range, this is our daily range. And if you pay close attention to what price is doing there, specifically if you drop to the lower time frame, you see price breaking structures, which shows that we have minor retracement inside the overall trend. But the particular point we had the break of the overall trend, which is the major trend we are considering, is this particular point. So when price broke this particular point, this was the break of the major structure which we are looking at. And after that particular one, what do we see? We have another retracement. And after the retracement, you see price continuing to the downside. So this retracement even helps you understand the direction of the market. So you should be making your notes. Firstly, retracement creates new trade opportunity by creating demand and supply zones or your order blocks. Secondly, retracement helps get an entry pattern. It helps you get an entry because it pushes price back to your supply and demand zones. Thirdly, retracement helps build liquidity pools and inducement areas. Just like what we see right here, retracement helped us identify this liquidity pool. After it built this liquidity, it swept it before mitigating our zone, giving us an entry. Another important thing I just mentioned is that retracement helps us understand the directional bias and institutional order flow, because what we can see right here is that it has helped us confirm the direction of the institution. So as we go ahead, I'll still give you more which you're going to include in your notes. So over here, we had this retracement. This is the highest point of the retracement, which pushed price lower to form this lower low we have right here. After that, what else do we see? We have another retracement and the continuation. Now, for me, the size of the retracement does not really matter. No matter the number of candles, it doesn't matter to me. The most important thing is I have a pullback. Now, at this particular point, what can we see right here? This was the highest point, and this was the lowest point after this last retracement. Price broke structure to the downside. Do you see that we'll be anticipating another retracement as well? Now, after this retracement, we were actually expecting price to continue lower. But in this case, we were not able to see anything close to that, okay? We were not able to spot anything that looks like that kind of retracement. Instead, what do we see? Instead of price to at least retrace and continue, we see a change of market direction. So this is why I said you shouldn't trade on the retracement combined with every single smart money concept you know. Now, at this point, price moves higher, breaking above this particular high right here, which has now confirmed that we have a market structure shift. And just like we say, market structure shift occurs against the trend. It does not align with our trend. So we had a market structure shift, which means that we might have a shift in the direction of the market. And having a shift in the direction of the market means we're actually going to have a shift in retracement. Based on what we've been seeing, we've been having retracement to the upside. So this is an example, retracement to the upside. Here's another one, retracement to the upside. Another one right here, retracement to the upside. We have this one, retracement to the upside. So price has been retracing to the upside. Now, at this particular point, the next retracement we're going to anticipate now that we've had a shift in structure is a retracement to the downside. If you are confused, calm down. I'm going to explain. What we have over this particular area is that price continues to the upside, which means we've had a shift in structure. And I said we should anticipate a retracement to the downside. This is exactly what I mean. This is price retracing to the downside. So this is the retracement phase we have right here. This is a retracement. And after that, price continues to the upside, breaking above this particular high. So now that price is able to break this high, what are we going to anticipate again? A retracement to the downside. I hope you get that. Now, let's pay attention to the smart money opportunity you're seeing right here, because if you take a look at this particular move that shifted the structure, this is a clear institutional move. And when we identify this institutional move, what do we usually do? We look to mark a point of interest, which is a demand zone in this case. Just like we explained right here and right here. I said supply zones we identify here, this particular supply zone, we identified it after we saw a slow price action followed by this institutional move to the downside, which price came back later for mitigation. Take a look at this particular one right here. A slow price action followed by institutional candle to the downside, which price came back for mitigation. Now, pay close attention to this particular one we have over here again. This is a slow price action followed by institutional move to the upside. Now, this confirms that this is a good point of interest and we can look to trade from here. I hope you get that. This is a very good zone. And this particular trade, I actually shared it to my community, this particular one. And let's firstly try to identify what retracement has done for us in this particular trade opportunity. One of the things retracement did is that it identified here as the inducement area. Retracement was able to build here as inducement area, went ahead to form other lows. And after it formed these lows, this automatically makes here a liquidity pool. Hope you get that. Now, just like I mentioned initially, retracement can help you understand where you have a liquidity pool. It can create a liquidity pools, and it can as well help you understand when the trend of the market is changing. Okay. Now, another important thing we have right here is that retracement also swept liquidity, because you see price swept the liquidity we have over here. And after that, you equally have the sweep of liquidity we had underneath this low. So this was actually done by the retracements we have right here. Just like I said, this particular trade opportunity was shared to our community and they actually offered good results. Let me show you. So this was the exact trade opportunity I'm talking about. You see, this is USD card, the 2 hours time frame. You see how I marked everything, and you see price offered about 4%. Price actually offered more, but this was during the updates when I said price was already offering 3% and we had 1% more to go. And this trade opportunity was shared on the 8th day of July. Now you see that. So I'm teaching you what I trade. I don't teach with random charts. I see that a lot of time. Now, extending this zone and expecting to see how price pulls back, because over here we're actually seeing a different thing. Because if you try to pay close attention, even though price didn't close underneath this low, we had a sweep, but we had another retracement right here, because the direction of the retracement has changed at this particular point. Retracement to the upside. This is now the trend back into the zone. And one thing you have to understand is that the major direction of the market is bullish at this point, because we've confirmed a market structure shift around this particular area. So the price direction is bullish, this low and this high, if you try to check it from the higher time frame. Okay, so what we're actually anticipating now is that price will get to this zone, and let's see how price retraces back into that zone. Now, what we see again is that price breaks structure to the downside after it continued with the original direction of the internal structure. Now, this is another retracement, and after this retracement, it gives you a clue of what price is going to do next. I don't know if you're actually understanding what I'm trying to break down into this lesson. This pullback we had right now, it's giving you a clue. What's the clue? That price is going to do what? Continue to the downside. Continue to the downside means it's coming back to this zone. And coming back to this zone means you have to get your entry. You have to take your buy from here, because it's firstly created a zone right here, which is a demand zone. One of the things it did while it was moving, it created a demand zone. And since it's pulling price back inside this demand zone, you should be buying. This is exactly the same thing you're able to identify when we explain these first two trade opportunities. I hope you get that. Now, playing price forward to see. Now, what do we see right here? Price pulls back, didn't get to the zone. We had another retracement before finally making it back inside that zone. So now that price mitigates your zone, this is why I say you should trade it with smart money concept. You should have an expectation. Expect another change in the market direction, which is going to align with your overall structure now, because your overall structure now is bullish. Now that price has now mitigated the higher time frame demand, you should have a shift in your direction as well. That is the lower time frame direction. That is the internal structure direction. I hope you get that. Now let me play price forward. Boom, price continues to the upside. And let me explain what we have right now. What we have right now is very similar to the exact same thing we have here. Now let me explain. Price mitigates a key level where it broke structure to the downside. After the pullback, we had the break of structure to the downside. Price continued higher and offered a market structure shift. The only difference right here is that price is doing it inside the internal structure, but this is a market structure shift based on what we've seen inside the internal structure. Price continuing to the upside. Can I tell you that we have another trade opportunity right here? Yes, we have another trade opportunity right here, which is this particular one we have over here. And if you take a look at the trade opportunities I'm sharing, it's very similar and valid. It's very similar to every smart money setup I share and I trade. If you follow me very well, it's very similar and trying to extend. Extending this means that at some point in the future, price will come back to this particular level for mitigation. What is mitigation? Reduction of risk, where the institutions come back to mitigate levels. Now, let's just focus on the retracements we're talking about. Let me not divert. Let's see how important retracement is. Price continues to the upside. Now we're having a retracement. After this retracement, we should anticipate another continuation. Plain price forward to see. Now, in this particular case, you see price slowed down a little. So this tells you that you might not always get a very clear retracement like this. You might at some point see price retrace, react while it's trying to create a new continuation. We might have a very chubby price action like the one I just identified right there. But let's keep playing price forward. But finally, we have price moving above this particular high. At this point, the retracement you see right here is a little bit chubby and more like a range. But this is actually to our own advantage. How is this to our advantage? This is price building what? Liquidity right here. And what is this liquidity doing? This liquidity is just making this new demand zone a high probability demand zone. This is how important trading pullbacks is. This is why it's important to understand exactly what retracement means. I hope you get that. I'm going to continue playing price forward to see. Now, price was able to move above this particular high, came back for a mitigation right here. And if you try to continue playing price forward, you're going to see more retracements. Now, this is exactly what we're seeing right here again. A break of structure to the upside. And this gives you idea that, okay, we have a trade opportunity around here because we had a slow price action. It gives you that idea. And what are you going to anticipate? The anticipation should be that price will come back to this zone and continue to the upside. And this is exactly what I expected right here. And I'm going to play price forward to show you that. See, price came back to the zone and it's continuing to the upside. And let's see. And after that, you see price moved underneath this low. And this particular one actually shared this trade opportunity to the community. Yes, I was actually wrong sharing this trade opportunity. I know it was risky, but it's valid. It's a valid trade opportunity. Why is it valid? It meets with every smart money criteria. The only criteria it didn't meet with is the concept of premium and discounts, where we trade with our Fibonacci tool, because this particular price action is at the premium level, and trading this zone down here is actually at a discount level and it has higher probability. And this setup was shared to the VIP as well. So let me show you. So here's the VIP community, and you see this was the setup on USD card, the 1 hour time frame, and this is exactly what I'm explaining, the particular points and the setup that was shared. Just like I indicated, the setup was risky and we lost right there. So even when I show you winning trades, it doesn't mean we don't lose trades. We lose trades as well. So you should expect that when we win, we lose as well. So at this particular one, we lost trading from this particular pair. And paying attention to what price is doing, price breaks underneath this low, which has now breaking the rules of retracement, which has now given us the idea, okay, we might start seeing a shift in structure. And this shift in structure is just trying to get price back into this low after price has been able to build some liquidity inducement area. And not only that, this setup didn't only break the rules for the concept of discount and premium. It also broke the rules for liquidity because that's actually a liquidity area. Yes, sometimes you might not really get it right. So we are actually trading from a liquidity area. And during the meeting today, because I'll be waiting with my VIP students today, I will still explain that to them. One person actually corrected me after the setup was shared, but it was already late. It was already shared to the community. So continuing to read what Price was doing. Boom, price continued to the downside, just like I explained. Now that we've had this shift, we anticipate the continuation to the downside. And what are we seeing right here? We had what? A little retracement before the continuation to the downside. And believe me, this little retracement right here is actually a very good zone. This is a good zone. This is a strong zone, and it could do something. Just pay attention to this. Once you see these retracements in the market, try to mark these levels. And after marking these levels, the assignment I'm going to give you is this: try to know the ones that is the strongest. And if you're able to spot the strongest ones, believe me, you'll be getting good trade opportunities. You'll be able to select the right ones and know the ones that are actually liquidity and inducement, playing price forward. Then finally, price got to a point of interest. After price got to a point of interest, the exact same thing we've been seeing over and over again occurred again, which tells us that price is ready to continue in direction of this overall trend, which is a bullish trend. And I'm going to identify it once again. The same thing occurred right here. The exact same thing occurred right here. And currently, we're seeing the same thing right here. So anytime I see these things, I know, okay, I'm actually expecting the same result on these trades. And what is that? We had a sweep of this low, equally see price breaking above this high. What does this tell us? This tells us that price is ready to skyrocket to the upside. As simple as that. Now, playing price forward. Price starts to move away. After we did what? We had this retracement which confirmed the confirmation, then it continues to the upside. Now playing price forward once again. Boom. Price blast above this high, and now it's getting to this particular one. So this is why retracement is important, and I just closed my profits on this particular trade before I decided to talk about retracement. This is actually the current price right now. Let me show you. So this was actually the setup I just used for the examples, and from what you can see, this USD card price just got to full take profits. Price was offering 5%, but I usually go for 4% anytime I take this kind of trades and trying to find where the trade opportunity was shared. This was exactly where we had the trade opportunity. And this trade opportunity was after the USD card setup we had failed. So after the 1 hour time frame setup on USD card failed, that was when I just shared the new opportunity on USD card after I understood exactly what retracement means and what price is going to do. And at this particular point, this is where we had that pullback. We had the retracement, and I know the next move is price coming back to a point of interest. And this is exactly when price was offering 1%. Then when price was offering 1% on USD card, exactly, price was still offering 1% on gold. Now, the statement I made was, let's see first to hit 4R. I was actually expecting to see the first setup that is going to hit 4%. And from what we can currently see, price also hits 4%. This is USD card where price hit 4%. And this is the setup on gold as well. It got to 4% as well. So the setup on gold actually got to take profits first. So this setup on gold, I wanted to use it for example as well, explaining retracement and how important retracement is. But I don't think I really have the energy and strength because I really want to step out right now to catch up with something. But anyways, maybe my next week, I'm going to share that. And if you're interested in joining a mentorship, if you enroll for mentorship, you have access to this VIP community because this is actually a general VIP community for students under my mentorship. So you can as well check out the link in the description and you're going to have access to that. So I really want to thank everyone who took out time to watch today's lesson. Thanks very much. I'm Solomon Wisdom. See you in the next lesson.